Few could have predicted the exponential growth of decentralized finance. But to those who know how broken traditional finance is, the rise of DeFi comes as no surprise. And no area is more in need of disruption than asset management. Ordinary investors are locked out of high-quality opportunities by the current asset management model, which favours institutional and wealthy investors. Funds with opaque revenue data, which are susceptible to foul play, are increasingly harder to trust. The high licensing and legal fees and lack of investor connections also keep many talented would-be fund managers from initialising their funds. The only way to fix this broken asset management model is to upgrade it out of existence. Enter Cook Protocol, a next-generation decentralized asset management platform. Here's how it works. In our cross-chain ecosystem, fund managers first configure their investment strategies and initialize their own funds with minimal fees. When investors select a fund to invest in, they'll deposit their crypto assets into that fund's designated smart contract. In exchange, they'll receive unique LP tokens that they can redeem or trade anytime. Empowered with liquidity and advanced trading tools, fund managers will then allocate those funds according to market conditions to maximize everyone's returns. Cook Protocol employs decentralized autonomous organization and tokenomics to bring the accessibility, transparency, and security of DeFi to the asset management industry. Cook Protocol, we bring finance to the masses.
All right. What is up, Crypto Nation? Look, so today, obviously, we're talking about Cook. If you hung around this long, then it's a treat for you. Anyways, so this is a new platform called Cook Protocol. They have a really good team behind this. And that's one of the important things that I always look at when I look at something. Is the team active? Do they have, is it anonymous, or do they actually have real people? You know, so on and so forth. So they do have a good team. Great people you can go check out if you do your own research. And basically what they're aiming to do is exactly what they said. Think of it as like mutual funding. Basically, you're paying to stake, or you're paying to mine in liquidity, and basically you're locking your money in so they can invest it. A lot of people would say, well, this is sort of like a BitConnect 2.0 or 3.0, however many they had. This is kind of what that is. You're putting your money in, you're locking it in with this entity who then makes trading decisions and investing decisions on your behalf. Once your staking period or locked up period is done, then you can go ahead and get your money out of there. So yeah, let's check it out real quick. But anyways, it tells you right there in the name, right there, decentralized asset management platform. So that's what they're doing. They're investing your money. And what's very interesting about them is they already have a leg up on the game. And what do I mean by that? I mean, these guys have already done what we're hoping SafeMoon does and some of these other tokens. Look, they're already on Uniswap. They are a cross-chain platform. So they're taking money from all the chains and they're investing it, which makes it really easy. It makes it easier for us because if you're using Ethereum, then just go ahead and use Uniswap. If you want to use Gate.io, go use Gate.io platform exchange and get your tokens. If you want to use Pancake, go over there and switch your tokens. I mean, they got MDEX, you know, and I think their roadmap shows what they plan on doing next. We are considered well, maybe we're quarter two. Are we considered quarter two yet? No, quarter one still. Yeah, you can see the progress they've made, and quarter two is going to end here. They've already got Uniswap listing. The leverage pool is open source is there. The only thing they don't have, I'll show you later, is a liquidity pool yet. They got the Cook DeFi index releases coming, Columbus version, Cook protocol third party audit. And like I said, man, these guys are cooking, man. They're cooking. They're already ahead of the game when it comes to getting this stuff done. This is a project, maybe not this one per se, but what I'm saying is that projects like this, you have to find there's tremendous potential in a program like this because they've already got their ish together, so to speak. They've already got their stuff together, so it's a lot easier to rock with them, knowing that they're already trying to do the right things. I mean, setting up exchanges, especially with Binance by itself, within the last week or two, has been a nightmare. Simply because it's almost like it's a shortage or something. Everybody's like bombarding Binance. So imagine being able to get a lot more of your popular tokens off of any exchange just by using one service, right? That'd be pretty damn cool. Let's check out the token itself and see if we can get some more information. I do believe I opened a one-pager. So here's the vision: become the world's leading decentralized asset management platform, provide secure, transparent, and high-quality asset management service for investors. That's great. You know what I'm saying? That's great. What else they got? These are the solutions they're trying to fix. Smart contracts are really, really, they're great. Let's just put it that way. But there is a problem. They're solving problems. They're offering solutions to some of the problems that we have at this moment. Some could argue that if these issues correct themselves, there would be really, where would a model like this fit in to a fixed, or assumably a fixed ecosystem? So for example, let's see, for example, so we love Ethereum. We've loved Ethereum a lot. When Bitcoin was getting crazy, Ethereum was the way to go because it cost less fees. Now, fast forward a couple years, the gas fees are horrendous. You know what I'm saying? They're horrendous. And it sucks because it's driving people to Binance. And what I mean by that is, with these dApps, even if they're on Ethereum, it doesn't matter. These dApps have been making so much money. And the issue is that, like I said, Ethereum's gas prices are extremely high. And if they weren't extremely high, if they were relative in terms to what Binance charges for their fees using the BNB, you would see that there's more value in using BNB over Ethereum at the moment. And that's just taking care of transaction fees, right? It's a big deal. It's a big deal. No one wants to send $100 or $100 or $200 on Ethereum and then have to pay a $40 to $50 gas fee. That's insane. Why would you want to do that? But a lot of people are being held hostage right now because of that simple fact. Well, this is where this comes in. Say you want to buy Cook token, but gas fees are too high on Ethereum. Well, you don't have to worry about that. You can just switch right over to Binance and go over there and switch it out on Pancake. That easy. You know what I'm saying? Very, very easy stuff. Very, very cool tech that they're trying to do. And you should definitely check it out. I mean, I think it is early enough right now it's early enough right now at around 6 cents. To get into it. We're going to check out the actual app. Let's check out the app and talk about it. So, this is their front page. I've already got my wallet connected, and this is my, I believe it's my Ethereum wallet. I could be wrong. Who knows? So, obviously, I didn't take part in the early investing. I was not a part of that. But if you did, I guess your stuff would be here, where you can claim your tokens. which is I would like to point out as well. A lot of these ICOs and a lot of these programs, these finance programs, or even these exchange programs, they don't even have anything like this for people who invested prior to public offering. They don't even have anything like this. It's always, well, once we launch, then we'll send you your tokens, blah blah blah. And that kind of sucks. It would be nice to have something on a platform that they already have, their app, where you can just go in, hit claim, boom, get your tokens, and keep it moving. You know what I'm saying? For people who don't want to lock it up and they just want to sell, they're not being held hostage because somebody else has their tokens. So that's a really cool thing. Liquidity mining is not up yet. That's something that's going to be coming really soon. That's going to offer a lot more potential for profitability. So look out for that coming soon. The Cook mining. So their mining, like I said, is basically like staking with a small twist. Now, if you want to get into something like this, right now it's very, very profitable. Now I'm under the Ethereum network right now, so it's showing Ethereum numbers as far as APYs and all that good stuff. So let's just say that you wanted to get involved, right? You would just come right here to Cook Mining, select stake, and that's it. There's different periods. This Libsyn period is 300.8% APY. Now remember, this is based on a 365-day turnaround. So you stake it that long, you're going to get the full 300%. It's got a 30-day lockup period and a 14-day vesting duration. Now, for people who don't understand what that means, that simply means that you're gonna get you're guaranteed a 300%, 300.8% on your investment over a year's time, but you have a lockup period of at least 30 days. So again, you can kind of do, you have some wiggle room. The only thing I don't like is the lockup periods per se, and simply because, we all know how that kind of goes. The game has evolved. Let's just put it that. The game has evolved, and when things like this pop up, there's plenty of them out there. This is no shade at Cook, but what I'm saying is that the game has evolved from the original lending platforms, I would say, of the past. And now there's more emphasis on pool staking and liquidity mining, basically. Same thing almost. And the cool things about that is having the ability to pull your money out without having to wait for a vesting duration. And what that does is when you have that option, what you're doing is you're giving the investors more of a peace of mind to realize that they can pull out when they want to. Now, whether they choose to let them take their coins out via swapping and whatnot, that remains to be seen. But any platform could rug, any platform can exit scam. I think as investors, we choose these different categories to justify our means of wanting to invest in that said project. Everybody doesn't share that same sentiment. They don't have the same opinion, and some people go on different types of categories to justify. So a lot of people, there's people who would see this and they would say, there's no way I'm doing that. I'm not locking my money up for 30 said days, and then when I hit unstake, now I have to wait 14 more days to be able to do that. Some people are not cool with that. and some people will be fine with that. It's two sides of the same coin. Some people say, okay, well, this is also protecting me, and it's protecting them. You have to understand, they're trying to make money, and the easiest way for them to make money is to limit how early investors can take out their money. You see what I'm saying? They make no money if a bunch of people invest and are able to just pull out when they want. There's no control there. It's hard to control the growth of your company when things are so volatile like that. You're going to have whales wanting to pull out, but they can't. You know what I'm saying? You got to lock it up and make them wait it out. Have some patience. Now, that is how companies such as the ones in the past, the great lending platforms like BitConnect, etc., made their money, and why it was very, very hard to catch them quickly on what they were doing. And that's simply because when you're doing this lending type of thing where you have a lockup periods, you're extending the life of your project, basically. But if your offerings or your APYs or your rewards are, if they're too high, then what's going to end up happening is there's going to be a huge inflation of people dumping money in to try to get this ridiculous APY. I'm not talking about cook mining period. I'm just saying in general, people are going to flock to it, dump their money into it, and now this company is super rich, and now they can afford to continue the charade for as long as they think they can. I would say a reputable company would take this model that Cook is using, and yes, the APY may be a little high right now. You have to understand that it's an invitation to get people to start investing when they see that. But I would like to hope that at least by like August or September, I would expect that this APY is going to be lowered. And because you can't just give away a bunch of free stuff and not have anything in return. What's the point of giving everybody super high APYs, and then what are you going to do with the money? You see what I'm saying? Like they have to have a good idea. I'm guessing and I'm hoping that they would have something like that, but there's no guarantee. But from what I see, it looks pretty good. You just have to be okay with the lockup periods, and trust me, it's not a short period. I mean, you're talking about a normal 30 days that you would usually take, and then you add 14 days on top of it to be able to do what you need to do with your tokens. You know what I mean? Like that could cost precious time. You know how fast this market changes, and to have your coins locked up and not have a chance to get out or make some money while you can, you're kind of stuck. It's like, okay, do you lock it away, and then what are you going to do after? What's your plans after it comes out? Are you going to restake it? Because if you restake it, you're back in for another 30 days. You know what I'm saying? So it's kind of like, what's going to be your goal? Basically, they're trying to, in my opinion, they're trying to attract long-term investors. What I see right now, which makes sense to me in a way. The way they're offering their mining right now, or their staking, is very genius, because a lot of people who are going to just jump on it real quick because somebody mentioned it, they're going to come in and see, oh shit, I can't, there's no way to pump and dump this. Like, if I pump this, I'm going to have to pump this for 44 days. You know what I'm saying? Like, I'm going to have to pump this for 44 days so I can get my money back and then hopefully make some money before I'm out of here. This is a deterrent for people who want to jump in, buy a bunch of tokens, wait for the pump, wait for the peak, dump their tokens, and now everybody else follows suit, and the company is in risk of going under when it just started. See what I'm saying? They need to protect themselves and we need to protect ourselves, but we kind of get shafted on our end as well because we're giving them more power to invest in whatever they're doing. So the other concern, obviously, is we don't know really what they're investing in. I'm sure there's going to be hashes and things like that so you can see what they're doing. But let's be real, man. With lending platforms and these things, unless it's completely transparent or they're sticking it out in your face, you know, it's kind of hard to track and see what they're doing on a daily. I mean, it's just very, very hard. So again, when you're going with these companies, you know what I'm saying? I always look at it with a certain amount of time that I want to be in and want to be out. Right now, my time for my patience meter is about 6 months for a lot of these projects. It just depends on how well vetted they are. It's about 6 months. At 6 months mark, then I can reevaluate and see how the chart goes, how it's been going, and then I might stretch it out to a year. You got to have patience, but at the same time, you don't want to stay in something that just, you know, it's not going to do anything. The name of the game for me is to make as much money as possible or stake as much as possible to get dividends, to get returns, to invest in other things. I don't want to keep pulling out of my pocket to invest. And I don't want to keep jumping from thing to thing because it looks hopeful. But what I'm saying is Cook does look pretty good. I don't know just yet. To me, it's kind of at a crossroads. It started at, like 34%. And let's see, I just had it up too. So if you take a look, this is Cook. Head over to Dex Guru and you can kind of see, you'll be able to see the trend. When they started back on, was it 3rd of April? When they started on April 3rd, it opened up at a pretty good price, man. It opened up really well. I think it was around 30 something cents. Oh no, wait, I'm tripping. It rose to 34 cents, did it? No. Open up at 23 cents. And then as you see the progression from the 3rd all the way until present day, you can see a significant drop. And you have to ask yourself, they have a pretty good white paper. They have pretty good execution. Why does it seem like they're struggling? You know, why does it seem like they're struggling? And at what price point did early investors get in at? Was it 10 cents? Because if they're opening up at 23 cents, I mean, that would lead me to believe that an ICO is probably around 10 to 15 cents. And I'm wondering if a ton of people put in a ton of money banking on they would jump higher than that at launch, and it looks like the opposite happened, or a bunch of people just sold because we kind of see it in the last couple days. I wouldn't even say in the last couple days, I'd say in the last 24 hours. You see where how low it's gone, you know what I mean? And right now it's going back up. I am thinking, you know, it's a tough thing. Like, what do you do? Is it something that you go for and you hope what? This is where I start saying, get a plan together. Plan your exit. Plan your entry and your exit. If you decide to come in at 6 cents, how much coin, and how long do you plan on staking it? Do you plan on staking it? Or are you just going to buy it and hold it? options for everybody, but you know, the potential. I look at things like, okay, it opened up at this 23 cents. What's the likelihood that it can get back to 23 cents in the next 6 months? And if I would like to get out at 25 cents, if it can get back there in 6 to 8 months, is that a number that I'm willing to exit at? You know what I'm saying? Am I willing to exit at 23 cents? I don't know. It's hard because I feel like it just started, so nobody really knows yet. You know, this is the danger of getting into things that open up on a short-term basis. It's hard to tell what direction they're going to go in because there's so much manipulation already for that specific market. You have too many different people trying to do too many different things, and it's hard to find the baseline. So, yeah, another potential project that has potential to give pretty good profits. Now, what I found most interesting is when you switch over to the Binance Smart Chain, you get extra APY. Now you're talking 413.6% to lock it up for 60 days. Or I'm saying for the year, but you have to lock it up for 60 days plus that 14-day vesting duration. Sucks, I know. 74 days that you have to worry about your you have to worry about your stuff getting unlocked. And then you got to hope that it's not complete garbage by the time you do that. But like I said, man, it is, I'm telling you, I feel like it's smart. It's smart on their part because you help kind of control the fluctuation in and the inflation of your product, whatever you're selling. So I feel like, yeah, they've done a really good job with trying to figure it out beforehand, to kind of just be upfront with people. Like, look, this is what you're going to have to deal with. This is what we're trying to do. We can't invest in funds and other things that's going to make us money and you money if we just allow you to take your money out at any given time. There's no way they can do that. There's absolutely no way they can do that. And this is why they make you pay fees and penalties when you're even dealing with like mutual funds and things like that of that nature. Is because depending on their rules, you'll have to roll with it or not. But there's nobody in the world that's really going to take a lot of your money and freaking invest it in other things just for you to say the next day, hey, I want my money back. What? No, it doesn't work that way. It's like a bank, man. You put your money in the bank, you deposit it in the bank, they use that money for other reasons, and they guarantee that your money is insured by the government in case something happens to the bank. But they're doing the same thing. It's a big liquidity pool. Everybody puts their money in Wells Fargo, and that's Wells Fargo uses that money to invest to make them more money. So it is what it is, man. People just don't really understand the concept. This does have potential, like I said. Does have potential for you. Cook. Baby, I don't know, man. Might be good, might be not. I think I'm going to wait until the end of this 24-hour period to kind of make my mind up, because right now, 6 cents is not bad. 6 cents is not bad, but what's interesting right now, like, so for example, there's another token that I'm trying to get my Switch EO tokens up. It's around 6, 7, 8 pennies, cents. What I guess what's more appealing to me about Hook is that simply you can, I mean, the APY is just outrageous, man. The incentive to stay with them and to keep staking is, to me, that's the profitable part, and to wait out. I know a lot of people are probably going to jump in once this liquidity mining is up and running, because this is the new wave. Liquidity mining, liquidity staking. You know, regular staking, they have to do things like this because a lot more people now are not wanting to stake by themselves. Why stake by yourself when you can jump in a pool that becomes bigger and bigger and bigger, and your success or your percentage goes up? You know what I mean? You stand to make way more money liquidity mining in a big pool versus by yourself. Because when you're by yourself, you have to have more tokens to make it worth staking, right? So also got to keep that in mind. But yeah, man, I think I'm going to make my decision after 24 hours to see where it moves, and then give it some more thought, some more research. This is how you do it. Don't just jump in and just throw some money at something when you have no idea what it's trying to do, how it works, and, you know, just basic information. You know, the only people that I give my money to without wondering what their cause is and whatnot is like the Girl Scouts or Boy Scouts. Like when it's Girl Scout cookie time, I can care less about what they're doing with my money. I just want my Samoas and or my caramel delights is what I like to call them. I don't know why they changed the name to Samoas, but I don't ask them what they're doing it for. I don't care. I just know that it's $5 a box, and I want my box. That's it. I don't care. I don't even think about it. I'm just like, there goes my cookies. Can I get some? I don't sit there and ask them 20 questions, asking them what they've done for the month. What are they investing in? How are they getting done? I don't need to know any of that. I just need to know if I can get my cookies. That's all I need to know. Same thing with these platforms. I kind of I want to know more before I just give you my money, because I don't know what you're about. I don't know how you move yet, how you make your money besides taking my money. I don't know anything yet, really. I want to see some of your work start to come out, you know, so it can pay off for early adopting. It could be a barn burner for early adopting. I don't know. But like I said, I'll be checking it out. You make sure you check it out. If you are going to get it, I would highly suggest that you pancake swap this and use the Binance network, because if you don't, you're going to get hit with you're going to get hit with nasty gas fee, especially the more you send. I would just suggest not doing it. I mean, I got some Ethereum and a couple other wallets that I'm about to just sell for something else, because there's no point of even moving Ethereum right now. It's so expensive. You'll spend more money at the end of the month sending token than receiving token. Like, it's insane. So anyways, guys, make sure you check them out. This is Cook Mining. I say Cook Mining, it's really Cook Protocol, but you know what I'm trying to say. Anyways, check it out. Do your own research. Tell me what you think about it and if you're going to invest in it. Have a good one. Peace.